Yet again, another IPO opens for subscription, which goes by the name Indegene Limited IPO. In this video, we will discuss the IPO details of Indegene, the business model, and the industry it operates in, followed by the financials of the company, peer analysis, and lastly, the valuation. First up, let's understand the business model of Indegene. Incorporated back in 1998, Indegene offers digital-led commercialization services to the life sciences industry. Their clients include biopharmaceutical companies, emerging biotech firms, and medical device manufacturers. So basically, Indegene assists its clients across the entire drug development process, including clinical trials, regulatory submissions, pharmacovigilance, complaint management, product sales, and marketing services. The solutions aim to improve the efficiency, effectiveness, and modernization of how life science companies develop, launch, sell the products throughout the life cycle. Having over 20 years of work experience, they cover all aspects of commercial, medical, regulatory, and R&D operations for life science companies. The company services can be divided into 4 categories. Enterprise commercial solutions and omni-channel activation caters to the commercial functions, with that of marketing and promotional activities of line-sized companies, while enterprise medical solutions and enterprise clinical solutions address the medical and R&D functions. In fact, a major chunk of revenue comes from the enterprise commercial solutions. The total revenue from operations has grown at a CAGR of 54% from 2021 to 2023. Indegene caters to the needs of clients from 6 operation hubs and 17 offices located across North America, Europe, and Asia. The company has around 65 active clients as of 31st December 2023, but the highlight is that it has established client relationships with 20 of the largest biopharma companies in the world by revenue. Now let's look at the IPO details. The IPO opens for subscription today and closes on 8th May. It has fixed the upper price band at 452 rupees per share. So for a retail investor, the minimum lot size would be 33 shares, translating to a minimum investment of 14,916 rupees. Indegene plans to raise about 1,841 crores from the public, out of which 58% of the issue would be an offer for sale, which means the existing promoters and shareholders are selling of their shares, while the rest of the issue will be a fresh issue, which the company will utilize for its business. The IPO has reserved 35% quota for retail investors. So what are the objectives of the issue? The primary reasons of the IPO are to raise funds towards repayment or prepayment of the borrowings. Second is for funding the capital expenditure, and lastly for general corporate purposes and for funding inorganic growth through acquisition. Now talking about market opportunity, the life sciences industry, including research, development, manufacturing and marketing of drugs and medical devices, is rapidly growing sector. Life sciences operations spend has grown at a CAGR of 6.7% from 2020 to 2022, reaching an estimated 12 trillion rupees. This growth is expected to continue at a CAGR of 6.5% to reach rupees 15.5 trillion by 2026. Several factors contribute to this expansion, including an aging population with increasing chronic diseases, discovery of new diseases, and a growing focus on preventive healthcare. Moreover, the life sciences industry is increasingly turning to service providers for help navigating the complexities of drug development. These providers offer expertise in digital technologies which can help life sciences companies adapt to changing models, reduce cost, and streamline operations. Several factors are driving this trend: a lack of in-house talent, the need to navigate regulatory hurdles efficiently, consolidation within the industry, rising operational costs, complex clinical trials, and the growing need for patient engagement solutions. By outsourcing these functions, life sciences companies can improve efficiencies and focus on their core competencies, therefore benefiting companies like Indegene. Now coming to the financials of Indegene, the company reported consistent growth in the revenue from operations from 966 crores in fiscal year 21 to 2,306 crores in fiscal year 23, growing at a CAGR of around 55%. Even the profitability grew to 266 crores in fiscal year 23 at a CAGR of 33%. Looking at the financing costs, the company employed a substantial amount of debt in fiscal year 23 for funding acquisitions and growth, which led to a significant rise in financing costs for the year. The financing cost rose from around 6 crore to 31.3 crores in fiscal year 23. This impact was felt even in the margins, which led to a slight decrease in fiscal year 23 as compared to fiscal year 21. EBITDA margins for fiscal year 23 came in at around 20% as compared to fiscal year 21, while PAT margins dropped around the 12% mark. Now coming to the peer comparison and valuation. According to the red herring prospectus, the company mentions that there are no listed companies or global companies with a similar business model like Indegene, and hence have not provided any industry comparison. Having a unique business model with decades of healthcare domain expertise and purpose-built technology customized to the client base, they are indeed currently a one-of-a-kind business. But on the valuation front, with an EPS of 11.97 rupees and an upper price band of 452 rupees per share, the price to earnings ratio stands at 37.7 times. To conclude, let's finish off with the strengths and weaknesses. Let's talk about the strengths first. Indegene operates in the life sciences industry, which is expected to experience significant growth in the coming years. The company's digital-powered solutions positions them well to capitalize on this trend. Additionally, the company has developed a suite of proprietary tools and platforms using AI, machine learning, and natural language processing that have transformed the R&D and commercialization processes of life sciences companies. With a presence in the US, Europe, and Asia, Indegene is well positioned to cater to a global market. Talking about the weaknesses, Indegene's focus is solely on the life sciences industry and may be adversely impacted by factors affecting the life sciences industry, including the growth of the overall life science industry, outsourcing, and other trends. Secondly, a significant portion of Indegene's revenues comes from a limited number of clients. That means 67% of the revenue comes from the top 10 clients, and not only that, a major chunk of revenue comes from North America and Europe. Any terminations or discontinuations of contracts from any of these could impact the financials. Having said that, this is me, Ralison, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com